Welcome to the Pro Farmer Podcast, your source for what's impacting prices today and your guide to what will impact markets in the weeks ahead. More substance, less fuss. The Pro Farmer Podcast starts now.
Hello, everyone. It's April 28, 2025. Welcome to the Pro Farmer Podcast. I'm Davis Michelson. I'm here with Pro Farmer editor Brian Grady. Brian, the volatility continues, and yet we're seeing some range-bound grain markets. It's a bit of a juxtaposition between the equities and the commodities right now. On Friday, we had corn fractionally higher in the front end and then slightly lower in the Dees. Meanwhile, we had beans down a couple cents in the front and just a half cent lower in the Nove. Winter wheat contracts up fractionally, spring wheat down a little bit. Maybe we'll get to the livestock separately, the cattle in particular. Coming out of last week, what are your thoughts?
Well, as Friday ended, it wasn't all that bad, but, overnight price action in the grains definitely wasn't encouraging for bulls by any means. So some uncertainties on the China trade front, obviously. Those are ongoing, and most trade deals take a long time, as we've talked about. And so there isn't a whole lot of hope for anything in the short term there. And then the weather outlook, generally favorable. So most areas in the U.S. will get some rains over the next week to 10 days or so, maybe even 2 weeks. That'll be good in the drier areas, and some of the wetter areas are expected to see the lighter amounts of rainfall. So generally, trade uncertainties, weather, going to put some pressure on the grain markets here to open up the week.
Are we going to get to trade some actual weather markets here at some point? Will we wave off some of this tariff uncertainty and the other outside news and just get back to a good old-fashioned weather market, Brian?
Well, to some degree, I think. I don't think we'll see the trade stuff completely disappear by any means. It's just every day is something new on that front, and so that'll keep it fresh and in traders' minds. But you do get to the point where you'll trade more weather and stuff. So we'll see. The corn planting pace was ahead of average as of last Sunday, a week ago, and so we'll see where it is this afternoon when USDA comes out. But the areas that are doing well are way ahead of normal. And then those areas where it's been wet and saturated soils in the Tennessee, Ohio river basins, lower Mississippi River Basin, those areas will continue to lag on their planting paces for now.
As they're too wet to start this planting season here, west of the Mississippi, they're having much better time of it, aren't they?
Absolutely. Just ripping along in a lot of those areas. And some rains are in the forecast, so that'll help out there as well with that crop that's been newly seeded. That we look at the drought monitor and we continue to see that area in the western Corn Belt, the plains that continues to need moisture because of the deficits there. And so, like I said, that's pretty much a positive across the board for the rainfall in the 2-week outlook or so.
All right. Well, I do want to look ahead to what's coming up this week, but we have got to talk about last week's performance in the cattle market. I have here in my notes, correct me if this is incorrect, June fat cattle futures, a new all-time high close, 208.25. Is that right?
Yeah. So new all-time high on the continuation chart and contract highs and the deferred contracts. And so just ripping along, we'll get the average cash cattle price from USDA later this morning. But it sure does look like it'll challenge the all-time high at 212.76 that was posted several weeks ago. And so everything seems to be looking up. Now we have news that USDA Secretary Brooke Rollins over the weekend warned Mexico that we may shut off the border to their livestock imports again if they don't comply on some issues reference to the New World screwworm issue. And so all kinds of potential positive stuff for the cattle market. That's in the face of all the economic uncertainty. And so while that the livestock markets face some pressure from that initially, they bounce back really strongly, and cattle futures, like you mentioned there, and then the hog futures also posting strong gains.
Well, yeah, let's talk just a little bit about that hog price action, because with the gaps, I mean, the hog market it will leave them, but it'll come back and fill those gaps. We saw the front month, the May contract gap higher, slip back to fill the gap, and then push up to post the highest close since Feb 19 at 92.80, up 85 cents by the close on Friday. An impressive performance in the hogs, to be sure. Let's start with the livestock as we start to look ahead to this week. What are you expecting in that livestock market? What do you be watching?
Well, because of the new world screw worm issue with Mexico and potential supply issues there, I think that's probably supportive. Last week's cash cattle action is supportive, and so we may see an extension of those gains in cattle futures. With that said, you're into all-time highs in rarefied air, and whenever that's the case, a new round of buying is potentially met with some selling interest, and so we'll see how that all works out. But there's good solid support underneath the market, whether we make new highs this week or not.
Talk has been that there is decent fundamental support under the grain markets as well, the corn and beans in particular, at least some underlying pillars of fundamentality. As we're moving into planting season, we got to be sure that we keep our eyes on these markets. We maintain our disciplined approach in marketing. I've got the November bean contract bumping up against the 200-day moving average, or at least moving in that direction. Can we get over that key level, break out from some of this sideways trade?
Yeah, so that one's probably going to be difficult, Davis. But if we do, then you uncover some buy stops and those types of things. I think that probably there's kind of a split focus in the corn market. With the old crop supported by the fundamental situation, the new crop may be held back a little bit by the fact that there's some talk out there that corn acres could top the 95 million that USDA estimated as of March, and so we'll have to watch that closely, and the planting pace will all come into play there. And maybe shift some acres around like we talked about with some of those saturated areas not getting as many corn acres, but maybe some of those that are ripping along with the planting pace, picking up a few.
We'll get a crop condition update later on this Monday afternoon. Beyond that, what other indicators are you looking for? We got any reports, anything that you're looking forward to this week?
Pretty quiet on the grain side of things this week. We do get on the first of the month with the flip of the calendar, the grain and soy crush, but the numbers from USDA are delayed compared to what the NOPA crush number is and those types of things. And so that report typically doesn't garner a whole lot of interest, though it will give us the official pace on the soy crush and corn for ethanol use.
Very good. Well, Brian, I'm going to cut you loose with that. I appreciate you looking at last week for us and looking ahead to next week. That's Pro Farmer editor Brian Grady. We'll be right back with the Pro Farmer podcast after this brief message.
Hey, everyone. Davis Michelson here, and if you're one of the listeners without access to Pro Farmer's daily market reports and policy insights, this message is for you. Right now, you can start a free trial to Pro Farmer, unlocking the same profit-boosting information that farmers have trusted for over 50 years. Sign up online at tryprofarmer.com. No credit card needed. Visit tryprofarmer.com to sign up and get more details and updates on the topics we're discussing today, plus much, much more.
Welcome back to the Pro Farmer Podcast. I'm Davis Michelson, and hey, don't forget to like and subscribe so you don't miss a single one of our weekly updates here at the Pro Farmer Podcast. Joining me now, Lane Acree. Lane, I took a drive this weekend. I was called out to western Kansas. Now, I come from corn country, so I'm technically not qualified to scout wheat, but I can tell you that I saw some varying conditions. Some were out, they'd been doing some burning, and so there was some fresh, clean, green coming up there. There were other fields that were further along. I saw some tillers. Talk to me about the western areas here. How are we doing on drought? How do these crops look? We've got some crop condition ratings now under our belt here. Just sort of assess how it's going for wheat right now.
Yeah, we ended up coming out of dormancy a little bit worse than we went into dormancy, and a lot of that is due to the drought that we've seen. And this is the last few years have been years of the have and the have-nots, and it very much seems to be the case again this year. HRW acres facing some dryness early in the season, but it looks like we're getting some rain. We saw some rain going into last week's crop condition ratings. We still saw some weakness, but a lot of that was due to the SRW acres on the eastern side of the wheat belt just weighing on those conditions. But this week, we're really interested to see where this afternoon's ratings end up. We'll probably be anticipating ratings to be a little bit higher, but yeah, it's really just going to be kind of all over the place, and it's just guessing where those scouts happen to be and what fields they do see.
Let me pull you over into the market. Any early indications this week as how is wheat starting off the week here?
Starting off the week very good. The forecast is calling just for some additional water coming in to the western side on those HRW acres, and really just a good mix of rain and sunshine. That's going to be really good for crop development. That's just weighing across the grain and soy complex. It's just starting off the week off on a pretty bearish note, but yeah, granted it is overnight trade, lighter volume, and things could change once daytime hits.
Yeah, that's good perspective on that. In last week's newsletter, you wrote from the bullpen about wheat in the 12 years since 2000 that saw similar volatility in April. July SRW futures have favored the upside in May 10 times. So in similar years, 10 out of 12 times, if I'm getting this right, July SRW has favored the upside in May. That's 83% of the time. And then selling has got to come back in at some point. Is this a flash in the pan kind of a thing that you've observed? Or is it kind of something that maybe we wait and let it build a little while?
So we tend to see that strength just in the first couple of weeks of May. So while we see that strength, it's not expected to last. And then April quote, we're looking at years that have seen pretty minimal volatility. So plus or minus within 5%. So a pretty tight range. And it's happened about half a year since 2000. So pretty significant amount of the time.
Yeah, that's really interesting. And that should give us insights on how to drive our marketing here, because you take that research and you made it very practical in the newsletter, keeping in mind that Pro Farmer needs to price its final 15% of 2024 production. Talk to us about how you want to handle that.
Yeah, we've got 85% price so far, so we're trying to just be wise in pricing that last 15%. We don't want to chase the market lower. We also want to have realistic expectations of where to sell it. So yeah, the history suggests we should see some sort of a rally here in these next few weeks, and we're looking to add on strength. We're targeting a rally of about 50 cents, which would be about $6 or a little bit shy of $6 right now with some of the weakness that we've seen here recently, but looking to just close out our sales on about a 10% rally here in the next couple of weeks.
Do you have a sense generally of how profitable that $6 level might be for soft red wheat?
I think there's a reason that a lot of guys are double cropping wheat these days, and there's taking advantage of some crop insurance subsidies, being able to do that double cropping, and it certainly helps profitability. But $6 wheat, I can't imagine guys are faring too well off of that. But there are some good signs of a potential rally here in the next marketing year. We're running short on 24-25, but in 25-26, the world wheat balance sheet, especially among the top exporters, is getting tight. The market hasn't really respected that, but we've seen Russian wheat prices bounce, and the first sign of a rally, the world's top exporter raising their prices. These prices can't stay this low forever.
Yeah. Low prices cure low prices, don't they?
Mm-hmm.
All right.
Sure.
Lane Acre, I'm going to cut you loose there. I'm Davis Michelson for the Pro Farmer Podcast. Thanks to Zach Zingula for production support, and of course, Brian Grady for joining us earlier. Come back again next week. Don't forget to like and subscribe to the Pro Farmer Podcast.
Thanks for joining us. We'll return next week with another episode of the Pro Farmer Podcast. And remember, everything talked about today is updated throughout the week on ProFarmer.com and in this Friday's Pro Farmer newsletter.